Okay, so good morning. The guidelines basically states that a customer comes with an application. Of course, the application has to be within the greenfield project, which means new, or an expansion, brownfield. And then it's got to be in manufacturing or agric and any other sector which would enhance employment and job creation. So the bank reviews that and sends to central bank kind of a preliminary review, if you like. And the central bank also looks at it and gives an in-principle approval to say that, okay, yes, this falls into the categories we're happy to fund. And they send that to the bank, and the bank now does a proper credit review because as it is, the bank takes the full credit risk. So they do a credit review through their own system and get approval either through the credit committees or the board. And after that, gives an offer to the customer who accepts, and then that is forwarded to central bank. Upon doing that, the central bank can then review and approve in their own system as well, and then disbursement can happen. And once disbursement happens, it should get to the customer within 48 hours of the funds reaching the bank. So that's the guideline in summary, how it's supposed to be and how the process is supposed to run.
Do we know of any cases where someone, company or individuals have been able to have gotten to the final stage and have actually gotten cash or loans under this new scheme?
No, I do not think, to the best of my knowledge, that anybody has got to that level. The scheme is quite fresh, so what you got now are inquiries and applications from customers, but it hasn't got to that level of the final stage and then disbursement. No, it just came out, it's like hot, fresh.
Okay. Now, for the banks taking the full credit risk, now that is, you know, the whole conversation on its own, and we know how, you know, when it comes to taking full risks, banks can be a little shy in doing that. And in this situation, the Central Bank of Nigeria is not sharing the risk. Do you think that this could potentially be a problem at some point?
Yeah, sure. It portends a problem because it would have been fantastic for banks from their own perspective if the central bank were to share the risk to some extent, because we're talking greenfield projects, they are untested, they are you know, projects that are new and fresh, and you do not know whether they would succeed or not. Even if you give them very cheap funds, it does not guarantee success or return on investment, because you've got other factors which play a part. Apart from the access to market, the acceptability of the product, you still have issues of infrastructure, power, roads, and so many other things. So cheap funds alone or good rates, single digit, does not necessarily guarantee success. And so the banks would have loved a situation, if you like, where the central bank could share the risk. And if you look at agric, which is even a riskier space to fund because of the challenges in those areas and the kind of situations they are in. So it makes it's possible that this would be likely one of the challenges which will face the initiative.
Now, speaking about success, countries like China, India, and Lebanon have used the differentiated cash reserve requirements to funnel funds into the real sector, credit to critical sectors, and they have actually been success stories. As a matter of fact, this regime has become an essential component of China's monetary policy toolkit. I'm just thinking perhaps the central bank is taking a leaf from those countries that have recorded success stories. What do you think it would take for our own economic realities here, looking at the state of the economy and some of the challenges that we have, for us to have our own success stories?
I agree with you, if the initiative works, it should be a fantastic thing for the economy, because then the manufacturers and the agri sector players would have, first of all, cheap funds or low-cost funds to deal with in their businesses, and then it's going to give time for planning because it's long-term, and people are able now to develop the business, focus on the business, and the ripple effect would be that the economy will experience a boost. You're going to have more job creations, you're going to have products and services come at lower prices ideally, and that should help the economy. Of course, take away focus, for instance, in our case from the oil, which we are looking to get away from kind of. So develop other sectors, manufacturing, agri, which are the places that should really be the, mainstay of the economy. So yes, it should be a good story if the implementation works, if the banks fully key in, and if central bank probably supports in a way to make sure that the banks do not carry all the risks, and then other infrastructural issues like roads and power are also dealt with so that those do not become an albatross. You know, you have a good program, good initiative, and something else from nowhere just scuttles it. So it's intended to be very good, and it should work well if run very well. You know,
I've heard some analysts say that they're expecting, or they won't be surprised if it's just the tier 1 banks that take up or get involved in this initiative. They're not so sure that the tier 2 banks will be willing to do that. What are your thoughts on that?
Okay, so the tier 1 banks, sure, have a greater potential to do that, but don't forget there is also a risk. No one wants to go and create more MPLs or issues for themselves, no matter how big they are. So it's also something to look at from that risk perspective for them, and not just cash reserve requirement that they have.
Okay,